We're back.
We are back.
We are back.
Podcast number 8 for us here at Wall Street Breakdown.
Yep, number 8.
I think we're doing a pretty good job.
I think so too.
I was thinking about this on the way to get you today. I was wondering if you think we're going to get to 10. 10 seems like a real, it's like a benchmark number.
I don't know. That's pretty far-fetched to get to 10.
I'm wondering if maybe, like one of us might spontaneously combust or something before we get to 10.
That has been known to happen.
That
right?
could happen,
That
right?
could happen.
In the podcast world, in the financial services world, spontaneous combustion, basically an epidemic.
Oh, definitely. Definitely.
How was your week?
Oh, my week was great. How was yours?
My week is excellent. I am healthy again. You look healthy.
Healthy, yep.
Tanned, lean.
And,
you're looking good.
Same here. Same with you.
Thank you. Yeah, I'm trying my best. I come in my Sunday best to do my Sunday podcast where nobody sees me. On the videos, I come in rags. I wear my burlap sack. There's no preconceived thought of looking good. But for this, I'm adorned in gold and mink, not real fur. It's a simulated mink. Let's not have the we don't want PETA or
anybody. No, don't get
simulated mink, but full on. I got a top hat and a monocle. I'm spinning a cane with a diamond tip. It's a beautiful thing on a beautiful Sunday. We've had good weather here.
We have. It's warm. It's going to be like plus 10 tomorrow.
We were talking about this global warming thing.
We have.
Maybe it's just Bitcoin. Bitcoin's heating up the world.
Blame everything on Bitcoin.
Everything is Bitcoin's fault.
I'm Anthony from Wall Street Breakdown.
I'm Cody from Wall Street Breakdown. It is marvelous to be back.
Yes, it is.
Podcast number 8.
Number 8.
I'm looking forward to it. With you, I'm looking forward to it. Sir, the floor is yours. Lead this circus.
All right, let's look at the news from Monday, December 4th. Disney to purchase film and studio assets from Fox.
Yeah, So we've heard that Disney's in the lead to purchase these assets from Fox. The assets are the TV and the studio assets.
Yeah.
So they're not talking about the news or the sports assets. They're talking about the TV stuff, the film stuff. We're hearing that there's a pretty good range depending on who's actually valuing this. We're hearing from $40 billion to about $60 billion is what the price that they're going to end up paying if they do end up getting this. It would be the biggest acquisition Disney's actually ever made in their history. Like it's
big.
It would be big, and it's quite a bit tethered into the streaming service. You have to imagine.
Yeah, I imagine so.
Bring in a lot of extra content. They bring in a lot more what would be brands, I guess you would consider it, under the Fox umbrella, right? It would bring in a lot of other stuff you'd be able to move around, as that streaming service probably doesn't want to be exclusively tied to just children's programming.
Right.
You'd want to have some adult-oriented stuff.
For a broader audience, yeah.
Yeah, you'd want to, try to broaden your audience as much as you can, because when you're going up against Netflix, you go on Netflix, and they cover the gamut.
Everything.
Yeah, they cover the gamut of stuff. So I think the big news, though, later in the week was the Wall Street Journal reporting that they think that Bob Iger, the CEO of Disney, might stay on through this. If this ends up taking place and they end up getting these Fox assets. When Bob Iger signed his last contract with Disney, he said this was the last one. He was actually going to be stepping out of Disney, and this was going to be the end of it.
Right.
But then we hear now, and of course this is rumors, right? But we hear that Wall Street Journal reporting that Bob Iger might stay on again through another about 3-year term, which would see then the integration of not only the Fox assets into Disney and full-on integration. I mean, it would give him a chance to really, Play-Doh this thing together the way they want to do it. And then on top of that, it would help the streaming service, because you got ESPN going live next year, and then you've got Disney going live the year after that. So Bob Iger would be on for that. I mean, amazing CEO. It would just build the legacy of Bob Iger. It's really tough to argue with Disney trying to get Bob Iger to stay. And for Bob Iger, I mean, what's he going to do after this? I mean, this is going to be the end. He's made hundreds of millions of dollars. I would imagine the next one's going to be, like a great biography he's going to end up writing. And this would just add to it, especially if Disney can come out of the gate with this streaming service and really start putting the boots to Netflix.
Oh, for sure.
Yeah, then you're only building on that legacy. So Disney closed the week $104.23. It was down on the week. I guess the market maybe doesn't really like the news too much, or they just think maybe Disney could potentially be paying closer to that $60 billion than the $40 billion for the Fox assets. Right. Maybe they don't really think Disney could integrate the type of programming Fox has. in comparison to what Disney does, but I would imagine the company, Disney is amazing. Everything they touch turns to gold. They've They've got the Midas touch, so this is going to probably work out just fine for them. It's just a matter of now getting this done.
Yeah.
So they're going to try to get this Fox thing done. There's a couple of companies nipping at their heels, Comcast, Amazon. We've heard a couple other companies mentioned in there, but I don't think anybody's in the type of talks with Fox that Disney is. So there you go. That's the news from Disney trying to get Fox's assets, and potentially CEO Bob Iger staying on for another term or whatever you'd call it, another contract.
Term, whatever. Yeah. Let's talk more about this Broadcom and Qualcomm deal that's going on.
Okay, so do you want to talk about the Qualcomm deal? You want to talk about, well, let's get into all of it. So Broadcom reported earnings this week, $4.59 a share, beat the street by 7 cents. Revenues of $4.84 billion, beat the street by 10 million, but up 16.6% year over year. They raised the dividend from $1.02 a share to $1.75 a share. That's paid out quarterly. That's a really big dividend hike, 71+%. They're a major iPhone component supplier, a lot like what Qualcomm used to be.
Yeah.
But Qualcomm is, I mean, they're not near on that same level anymore. They do a much more licensing approach for things, the way they deal with their clients, and I think that's got them in a lot of hot water, hence the legal problems with Apple and a couple of other unnamed litigations that are going on with Qualcomm, not able to receive what they consider is basically their licensing fee. They should be. Broadcom, I guess, as a supplier, they deal with people a lot easier. They're having a lot more easy time dealing with people. The semiconductor index as a whole was up 36% on the year so far. So all semiconductors put together in one big index, the index as a whole, and we know semiconductors are doing fantastic this year, up 36%. But Broadcom, in and of itself, up 49%. So they're up significantly more than other semiconductor companies in that, so in the exact same market, even though the whole market's up, Broadcom is still way up there. They are the heavyweights, definitely. Their wireless division was up 33% on this earnings call. Wired infrastructure up 3%, even though the wired infrastructure is the much bigger one. Obviously, the wireless division is the one that's growing a lot more significantly. And they put forward guidance, again, the 5% annual sales growth, which is substantial sales growth, and they reiterated that as it's going to continue to happen. So they've got a lot of faith in what they're doing as a company, and that was a really good earnings call in the middle of the week there. What we ended up hearing early in the week, though, was that they had presented Qualcomm shareholders with 11 directors that they want Qualcomm shareholders to vote in as they're trying to basically take over Qualcomm. I mean, there's a hostile takeover on the table. Qualcomm's board of directors have unanimously voted it down. Broadcom doesn't care one little bit. They're coming in there. They want to take this, right? And it's really going to end up, it sounds like, if shareholders are smart, because it's a pretty big premium that Broadcom's trying to pay for Qualcomm. And it's going to be the biggest merger of any two tech companies in the history of tech. What we're hearing is that they brought 11 directors from major companies that were CEOs, CFOs, high-end guys from a bunch of different semiconductor and other major tech companies. So these aren't just 11 Joe Blows walking in the door. This is some guys that have some pull, right? These guys got a lot of backing. So Qualcomm shareholders have to be looking at this as something that's a really good potential investment for them, because they're getting a premium, and then you get to be a part of Broadcom instead of Qualcomm, which, while Qualcomm's still doing relatively well in the general scheme of things, they're not near on the level that Broadcom is, and probably going forward, Broadcom's going to continue to make more distance on them.
Oh, for sure.
That's going to end up happening. So Qualcomm's annual meeting's March 6th, 2018, and that's when Broadcom wants the shareholders to vote on these 11 directors. Broadcom closed the week $259.91 a share. It was down a little bit from where they closed on earnings there. I think they were $263.89 or something like that. So they were down a little bit off that earnings call, which is kind of strange to me, because I don't think they're really overpaying $105 billion for Qualcomm. I don't think they're overpaying at all. Qualcomm thinks they are, and I thought the earnings call was great. So I mean, I think it's just a little bit of moving around in the share price.
Right.
Markets have been up. Broadcom's up significantly through the year, like we said, up 49% this year, right? So you're going to get a little movement just for no reason sometimes. Things are got to move around. And when you're up 49%, how many people have made their money already? And they're just taking a little bit of money off the table. I mean, that's going to happen, right? Everybody wanted to get into Bitcoin futures this weekend, so they needed a little bit of liquidity to get into Bitcoin futures. So that Broadcom, good earnings call. 11 directors to take over Qualcomm's board there. It looks like it could potentially take place. It's going to be really down to the regulators.
Right.
I think personally that it's going to go through on the Qualcomm side. We're not going to see it close to this deal for a year and a half or something like that, but it's really going to come down to the regulators, and if they actually let a deal this size
go through
in that industry go through, because it's competition wise, this would make for one large company that almost probably no other company could even come close to competing.
Probably
with.
not, no.
Yeah, Broadcom is a major component supplier for the iPhone, and we know the iPhone is selling
like hotcakes.
Amazing. They're doing amazing numbers with that iPhone X. So yeah. That's Broadcom's earnings. That's Broadcom and Qualcomm. That's the story of the semiconductor industry for this week. Sir, your turn.
Let's talk about CVS buys Aetna.
Yeah, CVS. So we heard last Sunday, and we covered it on the podcast, that CVS was buying Aetna, $69 billion or $207 a share. It was $181 a share for Aetna at the close, or at the time this deal was offered. Aetna closed the week $182.73. So again, a little bit of a bump. I don't think there's going to be near as much regulator concern with this deal getting closed as with some of the other deals we've seen recently. So I'm not entirely sure why Aetna hasn't really had their price drive up a little closer to that 207, because we know that the CVS deal it's on the table. This isn't just like a bunch of hot air we're hearing out there. This is something that's actually going down. CVS though, they closed the week 73.09, and it got a little bit of bump at the end of the week. But in the middle of the week, when we heard about, or in the start of the week when we heard about this deal, we found out that CVS was actually going to be, it's going to be a lot of debt that's going to be paying for Aetna, and the market didn't like that at all. So
I guess they borrowed money, right? Or
they're going to be borrowing money. So $44.8 billion in new debt and $21 billion in new equity that they're going to be offering. But this is really going to build CVS as a major brand in a few different areas. So CVS right now is a pharmacy, obviously, a retail pharmacy, right? But they're also a pharmacy benefit manager. So they're out there contracting prices for pharmaceuticals into their actual company and stuff. So they got a lot of leverage out there in the marketplace. And Aetna is obviously a health insurance company. So you're now going to get Aetna having the health insurance added into this CVS thing, which is probably going to drive a lot of traffic from the Aetna clients to use CVS exclusively, because what we're hearing, I mean, Aetna's got 46 million clients. That's a lot of clients.
Lots.
And if you can get them to get on board with the company that you're with, get a little bit of a home team discount, that's what we're potentially hearing, is that the copay for your insurance might be cheaper if you're doing your shopping, if you've got your insurance through Aetna, which will end up being a CVS division, obviously. But if you end up going and shopping at CVS retail, you're going to end up getting a bit of a cheaper copay that way. So it could benefit people on that end too. But that copay thing might be the thing that regulators start to wag their finger at and say, like, you can't, that's going to be the competition issue that might be the real problem. Is while CVS is spreading themselves out, I think in enough industries, while it's all medical, it's enough different versions of medical that I think it's going to end up working out for them from the regulator standpoint, but there may be some regulators adding in some concessions to this. So CVS was down on the news that they're going to be adding a lot of debt to be picking up Aetna. And I don't know why Aetna's share price isn't up again, but CVS's share price did get a little bit of bump at the end of the week, even though they got hammered the day that they actually mentioned that it was going to be all this debt. So we'll see, but I think the CVS Aetna deal is going to end up going through. I think this is probably one of the ones that I'd like to think you can put this up on the big board already, that it's going to end up happening. But we'll end up seeing, because
we'll have to see.
Who really knows in the world of regulators?
A lot of these big deals always kind of fall through sometimes.
You never know. We talk about that Time Warner deal.
Exactly. I totally thought that was going to go through.
Yeah, we all thought that was going to go through, the Time Warner deal with AT&T. And actually, AT&T is continuing to pursue that with the Department of Justice. They want that to go through. And actually, this week they set a trial date for it. So the trial date is actually set for March 19th, 2018. So AT&T was trying to get a bit of an earlier trial date for this, because their termination date for the acquisition of Time Warner was, I believe it's April 22nd, 2018. So it's pretty close to that trial date. But we've got a pre-trial hearing on December 21st. And I would imagine AT&T is going to try to get this trial maybe sped up a little bit. I mean, it's relatively expedient already. To go to trial with the Department of Justice within a 6-month time frame is a pretty good turnaround time. But Judge Richard Leon, that's going to be overseeing this, says that April 22nd is not realistic at all to actually have a ruling on the table from the Department of Justice. They're expecting to have a ruling late, they say late April or May. I guess April 22nd isn't considered late April. I guess it's considered mid-April.
I guess.
So they're thinking a little bit later into April. But I would imagine now that at least that ball's rolling, and it's rolling kind of AT&T's favor.
Yeah.
Because the AT&T definitely wanted this to get a little done more expediently. This seems like it's probably going to end up, at least we're going to get a resolution to this, as opposed to what it seemed like we were going to get, which is basically just this deal off the table and nothing going to happen. But AT&T is adamant and persistent that they want this done. So in the same vein that CVS and Aetna are probably going to have to go through a lot of regulators to get their stuff done.
Probably, yeah.
AT&T and Time Warner are trying to cross that last hurdle to get that deal done. And I think ultimately for the telecom and media sectors out there, I think that's a good deal to be getting done too. Because I really don't think it's a merging of too many assets that are too big, that box out too many of the other major competitors. I think companies like Verizon and Sprint could easily go out and start accumulating assets in that same media vein, or other major media companies could start accumulating telecom companies or vice versa. Whatever,
right.
There's a lot of things that could be worked around as far as that goes. But we have a trial date now, so March 19th the trial starts. But that SEC filing to extend this acquisition deal was only extended till April 22nd. So it's gonna be a real tight.
Oh, it definitely is.
We're coming down to real tight schedules.
Let's talk about the corporate tax reform that we heard about earlier this week.
Okay, so there's going to be a corporate tax cut. We know that. Obviously, it's got one more hurdle to pass. We're not 100% sure how this is all going to end up working out. But the corporate tax cut, you're trying to block those sneezes. I see that.
No, cough.
Cough. Oh, yeah. Don't cough. I thought you weren't sick anymore.
No, it's just a little tickle.
Just a little tickle. You should have got some water. You got to be prepared. You got to wet your whistle in the middle.
I know. You said I'm going to get something to wet my whistle. I should have done that.
You should have done that. So this corporate tax cut, again, it's got one more hurdle to cross in government. It sounds like some of the companies that are really going to benefit might get 15, 20% tax cuts out of this. But it's really going to be localized to American companies on American soil that are employing Americans. So that's what everybody wants to get through. Your major tax cuts are going to come from a company that is an American company.
Yeah.
So not
nothing abroad. Nothing.
Yeah. If you're international, making most of your money internationally, bringing money into America, you're still going to be paying some big taxes. Right. You may get a nominal cut because you are still doing business in the United States, employing some Americans. But your cut is definitely going to be based on how much you're doing inside the United States. That's going to be the big thing. But the guys that are going to end up being the big winners in all this, probably going to be a lot of the American banks, retail banks.
Oh, for sure.
They're going to end up getting a lot out of this. But they still need, and I mean, we've talked about this in the video about this, the banks are still going to need some loan inflows to really get to where they're making the kind of money that justifies this. And they're going to need some rate hikes to get a lot more viable as well. And we can expect rate hikes from the United States government coming relatively soon. That's going to be coming from the Fed as rate hikes in the future. So their economy is doing far too well for rate hikes not to be on the board. We've seen on Friday there I guess we'll talk about the Dow Jones and the S&P a little bit later, but rate hikes are definitely on the table for the future. But other companies that are really going to benefit are going to be cable companies, railroads, restaurants, and a lot of American industrial companies. So companies that are doing, again, most of their work in the United States and not abroad. So and the thing you're going to expect to see ultimately is a lot of these companies are going to have much higher EPS numbers than expected. It's going to really give a lot of kickback to those earnings per shares, which is going to go ahead and allow them to either do share buybacks, raise the dividend, go out and do some more R&D, do some more acquisitions, whatever it happens to be. It's going to give those companies a lot more money to play with. But we don't want people to be startled going into 2018. You can expect analysts are going to be they're already moving these numbers up, expecting some of these companies to get these major corporate tax cuts. So you're going to see that on the EPS numbers, that these numbers are going to get higher because they're just not going to be paying as much in taxes. You've got companies like AT&T and stuff that are paying well over 50% a year. They're going to get significant tax cuts on that, and you're going to end up seeing a pretty good bump there. So don't come 2018 when you see guys beating their EPS numbers by 20, 30% from the year before, if the economy's still going well, it's still going to be one of those that was maybe an 8% or a 12% year-over-year bump on good economy, and then an 18% bump because of tax reform. So you don't want to be looking at something and saying like, wow, how did that happen, right? Like,
yeah.
So take a look at what the analysts are going to be doing, because you know analysts are going to be making the adjustments for this already. So yeah, the tax reform, one more hurdle to cross though. And we know how the Democrats and the Republicans work. This might be one of those things where we may never actually see this come to fruition. But
no, never.
I can imagine that, we're probably going to have this end up happening. And it's good for American economy.
Oh, for sure it is, yeah.
You know, like if you're doing a lot of business inside the US and you're employing Americans, or up here in Canada, if you're doing a lot of business in Canada, employing Canadians, that ultimately benefits our economy the most, as opposed to you going abroad and getting as much cheap labor and all that stuff as you can, right? And circumventing tax. Because, I mean, you take a look at a lot of companies that work internationally, they've got their tax havens over in Ireland and stuff like that, where it's a lot cheaper to do business over there. The corporate tax rates are lower, so they move their companies over there, or they have a lot of their headquarters, international headquarters, over in countries that, you know, end up giving them a lot more benefit. It helps that country, because that country otherwise wouldn't have those companies there at all. So it helps them even to get 20% off you or 25% off you, but it doesn't end up helping the United States or the employees. So, you know, we want to see this coming back and helping out the citizens of the country. I mean, we live in, ultimately.
I'm
going to be a little bit biased. I don't care so much about Ireland. No offense, Irish viewers or Irish listeners. We love you guys. But it's, you know, like, you got to take care of home base first. Yeah. And I totally understand where the Republicans are coming from on this. I am 100% on board with this.
Me too.
Yeah, 100% on board.
Let's move on to news from Tuesday, December 5th. Let's talk about Regal Cinemas purchased by Cineworld.
Yeah, so Regal Entertainment got bought by Cineworld. Cineworld's the big cinema company over in the United Kingdom. Regal was up on the news, up to $22.73. It's a good buy for Cineworld. I think it makes them the second biggest cinema company in the world, behind AMC Entertainment, which is number one. The deal's for $3.6 billion. It's the movie business, you know?
Yeah.
It's a struggling business. They're trying to conglomerate or find any way they can drive traffic. We've seen on the same day that Cinemark started a monthly subscription plan at about, I think it's $8.99 a month, called Movie Club. Cinemark was down on the week, though, $36.04 to close the week. People weren't really too keen on the Movie Club idea. And it's just, everybody's kind of grasping at straws on how they can drive more traffic back to the cinema, and we've talked about it enough. I think
we have.
Yeah, it's one of those things that's slowly starting to dwindle away.
Yeah.
Not an investment I would make, no matter who's buying who or what kind of price, whatever they're doing. So Cinemark's deal is going to end up giving people. So if you're somebody who does traverse the Cinemark theaters, you know, maybe that's your local theater, they're going to give you some concession kickbacks with this monthly thing. And there's some admission price kickbacks as well with the $8.99, which is better than like Movie Pass, like Helios and Matheson, which is, I think it's at $8.45 to close the week, and down on the week again from, oh man, it was like up at $30 at one point a couple months ago. Because Movie Pass has been having a heck of a time with Regal or Cinemark or AMC getting actual deals back, you know, like getting some concession money or getting some admission money. No, even though they're feeding people to the theaters, they're not getting any kind of kickback from these companies. So they're only making their money off that monthly subscription, which ends up giving, I think, like they get a flat rate, but they don't get like a kickback based on how many times people go. Right? So they're not getting any kind of extra. Whereas I guess with Cinemark, I mean, it's their own deal with their own theaters. So they're definitely going to be they're making all the money here.
Oh, for sure.
And they already know their own margins. So, you know, like if $8.99 works out to be a better deal than them giving you a little bit of a kickback on admission and concessions, I mean, how much does a hot dog really cost? It costs $80 at a theater.
Oh, definitely.
But it probably only costs them, you know, like 9 cents to buy one. So, yeah, Cineworld buys Regal, $3.6 billion, makes them the second biggest cinema company in the world. They like the deal for Regal. I mean, shareholders like it, but it's not don't invest in the cinemas. That's quick, free advice there.
Yeah, it's kind of a dying trend, huh?
Absolutely.
It's kind of like the drive-through or the drive-in.
Yeah, the drive-in. Absolutely. The drive-through
the drive-through is booming.
That's why do you think medical devices and stuff are booming? You know, like healthcare is booming because the drive-through is booming. But yeah, the drive-in is definitely off the board.
Let's talk about Amazon and their pharmaceutical business.
So yeah, this was a strange one. You know, like they pulled their pharmacy wholesaler application in Maine. Just in Maine. And then a whole bunch of analysts kind of came out that day and started saying like, oh, maybe they're not going to get into the pharmacy business at all. I mean, I just don't see that. Like, they've got 15 licenses right now. out there. The only two states out of the licenses they do have that they said they're not going to get into the pharmacy business, and I guess maybe they ran into some roadblocks there too, or just roadblocks so far.
Right.
Because Amazon's going to pursue getting all in everywhere they can.
Oh, for sure.
They're Amazon, and they're in so many different segments of business that, I mean, why wouldn't they, right? Like, they're a great company. They're doing excellent work. So they're going to end up pursuing it. But right now, when you're doing so many different things like Amazon's doing with, like the Echo and Amazon Prime still like trying to get nice original content, and Amazon Cyber Monday doing really well. Amazon's just doing so many things all at once, competing with so many different people and so many different businesses. Maybe you bump into a bit of a roadblock in Maine, so you just, you pull the application for now. What's the big deal? And they said that for Tennessee and Indiana too, that they're not going to pursue it, but pursue it for now.
Right.
They didn't say just indefinitely.
No.
They're never going to sell any kind of pharmaceuticals. They've got the logistics in order with the shipping. They could compete with a CVS or a Rite Aid or a Walmart immediately, immediately in pharmacy. And because of the money that they have, they got the purchasing power to get generics at ridiculous prices. So Amazon's going to end up doing it. And let's just remember that Maine doesn't need a license. You don't need a license to sell medical devices and supplies. So just because they're not doing the pharmacy wholesaling, the medical devices and supplies.
They'll still probably do that.
That's still on a go, right? Because they're doing that in Indiana and Tennessee. That's what they said, is they're going to pursue the devices and supplies. They're not going to pursue the pharmacy wholesaling.
Okay.
But at the moment, I mean, with the Whole Foods outlets and so many places you could go to set up good, solid pharmacies with Amazon, that for them to not pursue it in the long run, it's going to be in all 50 states. It's going to be everywhere they can do it, right? It's Amazon. So I thought it was weird that analysts it's like they were looking for bad news. Like Amazon does, yeah, it's like they were just like looking for a reason to go like, oh, maybe they're not going to do it. Like,
it's kind of hype or something. Right?
Yeah, exactly. Yeah, maybe. Who knows? Maybe. But like, I think Amazon's going to pursue everything they can at some point. It seems like it.
Oh, yeah.
They don't seem too shy about...
No, I think they know what they're doing.
Yeah, Bezos is aggressive. They get into everything. Like, they're not just tippy-toeing around any business.
No.
Anything they get in full steam, and they compete. They compete day one with major companies in so many different avenues. Like, if you break down Amazon's business, they compete with Apple and Samsung and Google, and they compete with everybody. And now that there's Whole Foods out there, they're competing with Kroger's and Walmart. They're competing with every major company, it seems like, in every industry. At what point in time? Or like I think I said this during the video.
Take over the world, bro.
They're going to start going to space or make, Tesla's going to have to watch out, and they're going to start flying Amazon planes
to the International Space Station, making deliveries there.
Boeing's going to end up having to watch out. Like, it's amazing what Amazon does. So Amazon, other than not really infringing on Costco or Home Depot at the moment, Amazon's coming for everybody else. I would imagine.
Better watch out, guys.
They're not making a plane or going to space yet.
No, not yet.
Not yet.
We have a couple earnings calls. Let's start with the Canadian one. Bank of Montreal.
Bank of Montreal, $1.94 share, missed the street by 5 cents. You don't want to see that on the EPS number, especially with how good Canada's been doing. But again, this could be analysts doing a little bit of overestimating, even though there's a bit of a what do you want to call it, side note on this number here. So revenue's $5.66 billion, beat the street by $450 million. That revenue number is up 7.2% year over year, which puts them near the top end than the bottom end for how Canadian revenue growth was going with the financials, which were all relatively good, save for maybe Bank of Nova Scotia. CIBC was it's a fifth largest one. It's a miss as far as that, because you're going to go best of breed. But I thought TD's was pretty good. This BMO one was good, but obviously Royal Bank of Canada was really good. And then the National Bank of Canada snuck one in there that was excellent. They broke records on every segment. We're up in everything that they did. But again, really small bank. It's nowhere near the comparable numbers of this, but the growth is outstanding. Net income, though, for Bank of Montreal, $1.23 billion for this quarter in 2017. It was $1.35 billion for the same quarter in 2016. So there's a bit of a discrepancy there as well. Like that's a net income loss. That's you wonder how the banks could be up so significantly this year, and the Bank of Montreal could have that net income miss like that from year over year. So the thing with the Bank of America earnings, though, the EPS number, they missed by 5 cents. They're a reinsurer. So do you know what a reinsurer is? Have we covered this before?
I think we have.
So insurance companies, they buy insurance. They buy insurance to cover their end. Those are called reinsurers. They go out and they get insurance from a reinsurer, right? So they are relatively exposed in the United States. Bank of Montreal is in the United States quite a bit, just like the Toronto Dominion is.
Right.
Just like CIBC is trying to get in there. Royal Bank's down there a little bit, but it's not near to the level that a Bank of Montreal is. So they had 112 million in claims from hurricanes. So that ended up actually taking about 17 cents off that EPS number. So now we knew the hurricanes happened a while ago, like that.
Yeah.
So I wonder if analysts didn't adjust estimates. I didn't actually see an adjustment, but I wonder, missed by 5 cents. That could have been an adjustment miss. So that could have been a beat by 12 cents. It could have been a lot of analysts just didn't take into consideration the reinsurance thing, but it also could have been. So I would definitely say you want to do your research on that and take a look. If they really missed by 5 cents after an adjustment from analysts, that's a pretty big miss. If it wasn't, then it's a pretty decent EPS.
Yeah.
They beat by 12 cents. Just hurricanes, right?
Yep.
How do you stop act of God? I mean, you can't stop that, right? So Canadian personal and commercial banking up 6%. American personal and commercial banking only up 2%. We want to see growth there. Canada's doing wicked. I mean, we've covered unemployment numbers. We've covered job growth, all that stuff. Canada's doing phenomenal. The banks are doing phenomenal. So 6% good up here. But down there in America, where they're really trying to make some headway, to be up only 2%, I'd like to see that number growing a little bit more. That is not the greatest number I ever seen in my life. Capital markets, they were up 11% versus the third quarter. Again, this is the fourth quarter for a lot of Canadian financial institutions. So this was the end of the fiscal year. They were up 11% versus the third quarter, but they weren't near as good as last year's fourth quarter. So again, capital markets, just money's not moving around near as much.
Right.
Things are doing well, right? Why would you move your money out of stuff? Unless you're getting in Bitcoin, then you should move all your money.
Everything.
Take everything you got and get into Bitcoin now. Don't even think about it.
No.
Don't wonder why or how. Just
go with it.
It's moving so fast to the up and to the down. And I mean, how can you not be excited, right? So sell your jewelry, pawn your kids, whatever it takes. Whatever it takes to get the Bitcoin money in. But capital markets up versus the third quarter. So obviously money's starting to move around a little bit more. Up 11% from a quarter ago. It's moving a little bit more. The Canadian banks as a whole earned $10 billion in profits this quarter.
Oh, wow.
So that's a big quarter.
That is a big quarter.
So you can't tell me Canada's not doing well. It's we had a good financial earnings season. I don't think it was as good as the one in August, but I still think it was really good. Again, Royal Bank probably the best of breed already, and Royal Bank had the best earnings. BMO closed the week $78.43. That was down slightly from the start of the week, but still I thought it was a really good earnings call from the Bank of Montreal.
Let's take a look at the earnings call from a luxury home builders, Toll Brothers.
Toll Brothers, yeah, they make high-end homes. Like the average home price, which increased actually this quarter, is $836,600 American.
Wow.
That's $1 million Canadian.
Yeah, for sure.
So they're a luxury home builder. They are not just your average, they're not KB Homes or any Pulte.
Like
they're good home builders. So, but they ended up having a little bit of issue. Because of that, I think luxury home builder, the costs end up rising, and that was their big thing. So earnings per share, $1.17, missed the street by 2 cents. Revenues at $2.03 billion, missed by $50 million, but that number's still up 9.3% year over year. But they missed their own estimates, and people were not there. The market wasn't happy about that. Toll Brothers had set out a pretty good estimate of what they thought they were going to get accomplished, and they missed that, and the market didn't like that so much. They closed the week 47.87. It was down about $2.50 on the week, but it was up over 63% before earnings on the year.
Well, that's pretty good.
So they're up significantly on the year. They had a bit of a pullback off of, I guess, a mixed earnings call. Not a bad earnings call, but they said higher cost of labor, higher cost of raw materials was that was the big roadblock here. And I mean, higher cost of labor, when you're building luxury homes, when the materials, you need the best builders.
Oh, for sure.
You need the best materials because its resale value still stays with your brand name.
Yeah.
A lot of other homes get bought and sold, and if it's a mid-range builder, 10 years later, somebody's not really concerned with who built it. It's a 10-year-old house. When you're talking about a luxury builder, you're expecting these to be built with the best of quality and the best of craftsmanship. So it's one of those things where you got to pay. And an economy like the United States is doing right now, you got to pay for high-end builders and high-end material. So Toll Brothers ran into a bit of a hiccup with that, which I would imagine affected them selling more homes and selling homes at a bit of a higher cost, right? It cost them just a little bit on that EPS number. They still sold they were up 9% in homes sold, up to 2,424 homes sold. So they're still pushing homes.
They are.
They're not having any trouble selling homes. They're just not selling them to the numbers that they were expecting for themselves, which the market held them accountable for. So there was a bit of a pullback on the week, down, like I said, $2.50 from the share price that they started with before earnings. So,
right.
Yeah.
Okay. That wraps up the news for Tuesday the 5th. Let's move on to Wednesday the 6th. Talk about our favorite topic here.
So we're going to cover all this? You want to cover right up till today? Cover Bitcoin, just the whole thing?
Gamut?
Let's cover the
let's
gamut.
do that, yeah.
Okay, so Bitcoin is, it's basically... it's this cryptocurrency thing. It's not real. It's not a tangible thing you can hold or anything like that. It's lunacy is what it is. It's a bunch of people who are stark raving mad, buying and selling something that has no value as far as I'm concerned. I mean,
no, me either.
You can use your Square now.
You can, yes.
To trade Bitcoin. So let's just say, for an example, Anthony, you're going to sell me this plastic plant on the table here. So we're going to trade this in Bitcoin. Let's say it's worth, let's say, 1 Bitcoin. So when we start this story, Bitcoin was around $12,000.
Yes, that's correct.
They had a 20% dip the week before. It was around 12,000. Then it jumped to 13,000.
Yes.
We did a video. By the time the video was up, it was up to 14.5.
Yeah.
Right? I had people leave comments, 14.5 now, right? So the video wasn't even relevant at this point because things are moving around. Who knows what's even going on? But let's say you're buying this plastic plant from me. We're going to use our Square. We're going to do a little swipe here. So the plastic plant's worth 1 Bitcoin right now.
Right now, okay.
We're going to make this trade. So I'm going to trade you a Bitcoin. You're going to trade me this plastic plant.
All right.
Excellent. I feel like I got a good deal, except for an hour later when that Bitcoin I traded you is now worth 30% more or 30% less than what I bought. So what is the point of trading this for tangible goods or services?
It makes no sense.
Because there's no price that's stabilized.
No.
It's basically you're just trading like casino money. Like it's World of Warcraft stuff is going on. Like it's the price of some sort of ethereum, the fake mining.
Yes.
No, it's not real. It doesn't make any sense. It's so speculative. The price moves so much. Price was... Now, okay, there's a few different exchanges out there, right? There's a few different exchanges. Bitcoin right now is valued at like $200+ billion. It's ridiculous. There's it was 20 of the largest stocks on the S&P 500. Real companies that do goods and services at the highest end of capitalism. Bitcoin would be valued in and around there, in those 20.
Yeah.
In the top 20 of the S&P
crazy.
500. That makes no sense. It began the year under $1,000.
Yeah.
This week, it went from 12,000 to 19,000 to 16,500. Right now, I don't know what it is. 15.5 right now. 50 minutes ago when I took a look. So this is it's been a quiet start for futures trading on the CBOE.
Okay.
Not available on the CME yet. That's next week. That's when I imagine things are going to get really squirrely.
Oh, yeah.
But right now, it's been pretty quiet. These are January expiry contracts. 15.5 is what things are trading at. It makes no sense. To me, I don't understand what's going on. It's so speculative. Like I said in one of the videos this week, it's the tulip bulbs of the 1630s. It's the dot-com bubble. It's worse than all that because... it's going to crush so many people who in the last 5 years have come out of the economic crisis that the United States and Canada and the world basically had, where they've made money back. Exchanges have been up ridiculous. We've got like all-time highs, the Dow Jones, the S&P, things hit all-time highs every week now, and people are taking all that money that they made, and they're getting into this speculative nonsense. And it is just unbelievable. It's like I said, it's AI, it's Skynet, it's aliens. It makes no sense. One of the Winklevoss twins, it was in on this from the beginning. Those guys that were like in on Facebook at the beginning,
right?
Zuckerberg, They see it as gold 2.0, they said. There's only so much gold out there, and this is going to continue. I don't know. It was a whole bunch of whatever.
Yeah.
They said could be a multi-trillion-dollar asset. Again, it's not even you couldn't buy this plastic plant justifiably from me because one of us is going to feel swindled an hour from now.
For sure.
And 5 hours from then, the opposite person's going to feel swindled.
Yeah.
No one's going to be satisfied. So how can you trade something that can't even settle on a price? You go look at Forex markets that trade actual currencies. Those currencies move on such a 1/10 of a penny number.
Right.
That is how you actually have a fixed currency where you can tell that the price of a pack of gum is going to be the price of a pack of gum. Bitcoin is a gong show. So
it is.
CBOE trading, futures trading started today. Like I said, it's about 15.5 right now. When this podcast goes up, I'm sure it'll be some sort of monstrous number or it'll be worth pocket lint. Who knows? The CME trading starts next week. Godspeed to everybody.
Grab your popcorn and let's watch.
Grab your popcorn. Absolutely right. It's going to be hellfire and brimstone.
Yeah.
It's scary.
It is.
I am so scared for people that are going to lose everything they worked so hard for in these last 5 years with markets being so good. And people are just going to, it's just going to all go away for no reason other than just greed.
Yeah,
it's just greed. Yeah. People see this. They don't understand it either. They hear these fun cryptocurrency things. There's 15 cryptocurrencies now valued at over $1 billion each. Like there's not 15 in the world. There's hundreds, but there's 15 valued at over $1 billion. Why? Even if one catches on, what's the point of the other 14? None of it makes any sense.
I don't even see the point of the one catching on.
Get your money out of this. Or if you really like losing money, get your money into this.
Yeah.
I don't know. Maybe that's...
Whatever floats your boat,
maybe people have made too many gains. Maybe these guys are the Phil Heath of the economy. Wow. And they're just like, you know what? I got to taper off some of these gains. Too many gains for me.
Yeah. I got too much money.
I would not be involved. And Jack Bogle came out this week from Vanguard and basically laughed this off. You know, like we've heard Jamie Dimon laugh it off.
Yeah.
I mean, these people are basically just saying, like, what are you thinking?
Yeah.
Like, you're just being, like, drawn into this internet hype.
That's exactly it.
It's nothing. And, like, these financial news companies are forced to cover it because it's the only thing that's doing anything erratic. Everything else is really steady. Nobody likes steady, even though the steady is steady up.
Yeah.
Nobody likes it. You know, they don't want to. There's nothing left to talk about. Everything's going well.
Yeah.
So there's nothing left to talk about.
This is kind of like the big action in the stock market.
Oh, yeah. It's not the stock market.
No, I would say stock market.
CBOE and CME are adding some legitimacy, but this ain't a stock or a nothing.
No, I
right?
shouldn't have said that.
This is a whole bunch of nonsense. Get your money out of Bitcoin. Can we be done talking about Bitcoin for this podcast?
We are done.
Carry on with some real companies.
We have a little bit of Canadian market news. We have some Lululemon, Dollarama, and Bank of Canada.
The Bank of Canada. Okay, so let's start with the Bank of Canada. So we had good employment numbers last week. The unemployment numbers are great. We're doing amazing up here. I think the estimates for jobs was 10,000 net new jobs, and I think we added 79,500. Yeah. So we did pretty good. We knocked down the unemployment rate from, was it 5.1 to 4.8? It was something significant.
Something like that,
It was something significant. It was a significant knockdown. We're going to get a rate hike. We didn't get it this time. Later on this week, we didn't end up getting it. They left the rate at 1%. The second straight time they've left it at that. They were concerned the last time they met with some household debt and the price of real estate stabilizing. We've had real estate bubble kind of in Toronto, especially. Prices were ridiculous the first half of the year, and then they've settled down a little bit. But I mean, the big concern with the Bank of Canada was that, and we're not having any issues with that changing. It seems like the real estate market has settled down. Household debt kind of is what it is. People are a little overextended, but we've had not the greatest economy in a while, and now our economy's been coming back this year. Job growth, 12 straight months. So I mean, things are going really well up here now. So you can expect the Bank of Canada is going to be raising that rate the next time they meet. Job and wage growth are strong consumer spending despite the raised borrowing costs. So the Bank of Canada is going to be raising that, no question about it. So moving on to the earnings that we had from the week. Dollarama, EPS of $1.15 versus 92 cents last year at this time. Revenues of $130 million versus $110 million last year. So they beat both of those numbers year over year. The revenue was $810.6 million versus $738.7 million last year. So revenue number is definitely that previous number, the 130 versus 110, was the actual profits, the net income. So the revenue number 810.6 this year versus 738.7 last year. Comparable store sales up 4.6%. Average transaction size up 4.5%. So the tickets are getting bigger. Obviously, comparable store sales are going up. Nice number. Number of transactions only up 0.1%. So you're not getting more transactions. You're just getting the people who already shop there buying more stuff. The number of stores went up from the end of the quarter from last year from 1,069 up to 1,135. Last year, Dollarama was roughly about $100 a share at this time. They closed the week at $158.68, so it's a really good increase.
Oh, wow, yeah, that's pretty good.
They're growing. I mean, comp store sales up 4.6% is a big growth number, right? So, and transaction size, 4.5%. Big stuff, but that is nowhere near what Lululemon did. Earnings per share of 56 cents. That beat the street by 4 cents. They made profit of $58.9 million. Closed the week at the day that earnings came out, they were 67.66, up 1.9%. So 67.66. To close the week 3 days later, up to 73.77. So another big jump, $6. They were trading lower than this time last year on earnings. Now they're not. Now they've jumped it at the 73.77 number. They've actually jumped that. They expect the next quarter to be between $1.19 and $1.22 for earnings. Analysts got them at $1.18, so their expectations are already over the analyst number pretty considerably. Comp store sales up 8%. 8% for comparable store sales. That's versus 5.2 is the estimate.
Oh, wow.
And I think a big reason why people were kind of underestimating what they were going to do, and now they find themselves quite overwhelmed with it, was that Nike and Under Armour have both come out this year and said and have shown in their numbers that athletic apparel, just the actual stuff you use to work out in, has been down. And it's been down the whole year. So Nike and Under Armour, especially Nike, starts telling you athletic apparel's down.
Yeah.
Lululemon, they make athletic apparel. I mean, that's their gig, right?
Yeah.
And their numbers are up. So while Nike stuff might be down, Lululemon, this is a crushing good earnings call.
Oh, definitely.
Yeah, from a good Canadian company, that comp store sales at 8% is significant.
That is.
Yeah, they're doing really good work over there, and their store is it's bustling. We go by their store at West Edmonton Mall,
all the time. Yeah.
You see the traffic. There are a lot of people at that Lululemon store. People. So the Lululemon, really good earnings. Dollarama had really good earnings. And Bank of Canada, while they held the rate at 1% this time, you can expect a rate hike the next time, I would imagine. Stephen Pulaski, the governor for the Bank of Canada, he knows that they're just being safe at the moment, but that Bank of Canada is going to have to raise that rate.
Yeah. Well, we covered our main story for Thursday on December 7th. We can move on to Friday. The Dow Jones and the S&P 500.
Yeah, just record, right? We came out with U.S. unemployment numbers. The unemployment rate of 4.1% stayed steady. They beat the non-farm payrolls by, I think it was 22,000 for actual jobs. It's growing, right? U.S. is growing. The Dow Jones closed at record highs. The S&P 500 closed at record highs. Again, why you'd be invested in Bitcoin when things are going up. All these major companies raising dividends and stuff. It just absolutely baffles me. I don't know. It's the real markets are doing so well that it's like people are just sleeping on it at this point. They've just decided to not pay attention, and I can't figure out why, but it's a must that you stop watching the flashing lights and stop behaving like sheep and go back to being a shepherd. You know what I mean? And know what you're doing with your portfolio properly. Do your due diligence. I mean, you know better than this. If you're using anything more than your speculative money to be in Bitcoin and not to be even just in one of these indexes, not to just own the index, I find to be ridiculous. So that's, Dow Jones, S&P 500 doing great work.
Was there anything else that happened throughout the week?
There was, actually. We're a little low on stories, eh? So I put together a little list of some other earnings calls we had this week. And then I got a nice little write-up that Goldman gave us this weekend.
Oh, good. Right on.
So some other earnings, let's start with auto sales for November. So auto sales in November were actually down 3.3% from October. The October auto sales numbers was 18.1 million sold. The November number was 17.5 million sold. But that's actually about back in line with what expectations are from analysts. The last few months have seen a pretty decent bump in auto sales with a lot of insurance replacements after we had that brutal hurricane season, right?
Right.
So a ton of cars got wiped out the last couple months. Companies that are doing insurance or reinsurance have been giving back people their money for their cars that floated away. They're gone out in the Gulf of Mexico or out to the Florida Keys. Your Mercedes went. So you got to buy some new cars. This month, it's settled back down, back into estimates. So 17.5 million sold this month. So while it's down from October, you got to take into consideration that a lot of those vehicles purchased the last couple months were from insurance settlements. That's what was pushing that number a little bit higher. Auto numbers are basically back in line. AutoZone reported earnings, beat EPS by 15 cents, revenue growth of 4.9% year over year. They repurchased 597,000 shares at $353 million. They don't have a lot of money left in their buyback program, so you can imagine the next time the board meets, they're probably going to try to add a little bit more to that buyback.
For sure.
AutoZone closed the week at $721.89 a share, and it spiked on earnings, but it came back down a decent amount. But I thought that AutoZone number was still pretty good. It's a really expensive price to get into, right? That's $721 a share.
Sure.
It's time to maybe do a stock split there and get people a little more involved. Dave & Buster's earnings, EPS of 27 cents, beat the street by 3 cents. Revenues of $250 million, missed by $5.8 million. That number for revenue, though, still up 9.3% year over year. So even Dave & Buster's in a good economy. It's arcade and pizzas, man. They're doing good numbers down there. Their earnings or price for their shares, $55.18. It was slightly below from what when the earnings actually came out. So, I mean, Dave & Buster's said during their earnings call they're going to actually start opening up some smaller stores. So I don't know how that's actually going to translate. Maybe they're going to take out some of the bigger games or I don't know, they have like bowling or any of that. I've never been to a Dave & Buster's. Yeah, but down in the United States, they're not up here, right? So I would imagine they're going to take out some stuff and make much more user-friendly or price-friendly, like brick and mortar. As opposed to having the really big setups that they already have. So yeah, Dave & Buster's, I thought it was a pretty good earnings call. They missed revs by a real small amount, but again, revenue number up 9.3% year over year. American Eagle, they missed on EPS and revs just narrowly, though, coming in at 37 cents for EPS and $960.4 million for revs, respectively. That revenue number is only up 2.1% year over year. So compared to some of the other companies we've seen, where Abercrombie and Fitch, Gap, some of the other retailers, this was not near as good of a number. This, I think, when you compare it to the other retailers, people were probably expecting a little bit more. Comparable store sales, though, still up 3.9%, a decent comparable store sales growth for American Eagle. Their share price, $17.23 to close out the week. It was a good little bump since the earnings, but it's still, I thought that the comparable store sales number not good enough. And compared to the other retailers going into the Christmas season, I think these type of earnings calls from the quarter before give a good idea of where people see their purchase going. Where you're going to spend your money at. American Eagle, compared to some of the other retailers that we've already covered, it wasn't that great. Dell Technologies, so obviously the computer company, they closed the week at $77.25. It was a slight bump, but it was down on the week, so it was a little bump off the earnings, but people, I guess, weren't expecting much. The EPS number of $1.57 is not anywhere near the gap loss of 43 cents. Revenues at $19.6 billion. That was up 21% year over year, but they're correlating that EPS number, that gap loss of 43 cents, to the acquisition of EMC that they made earlier this year. And that's probably also helping the revenue numbers. You bring in a new company, that company's selling a bunch of stuff already. You bring that into the fold of what you're doing. You get your revenue bump from a good economy. And then also the EMC stuff gets their revenue bump, and that all goes into under Dell Technologies. So Dell, it was a decent earnings call. There's probably a reason we didn't actually do a video on it. Dollar General, earnings per share 98 cents. They beat the street by 4 cents, revenue of $5.9 billion. That was up $100 million over what the analyst estimate and up 10.9% year over year. I would have loved to get a Dollar General comparable store sales. I couldn't find one when I was looking for it, but beat by earnings, beat on revs. I thought that was pretty good. $93.38 a share. They got a couple dollar bump at the end of the week from that earnings call. And finally, the last earnings call that I'm just thrusting on you here is Brown-Forman. Do you know Brown-Forman?
No.
They liquor, lots of liquor.
Oh, that's probably why I don't know.
Good Kentucky bourbon over at Brown-Forman. EPS of 62 cents, beat the street by 9. Revenues of $914 million, beat the street by $42.5 million. That revenue number is up 10.1% year over year. They raised forward guidance, $66.48 a share to close out the week. That's about a $5 jump since the earnings call. Brown-Forman, good company, raised guidance. Things are going well. You're in Bitcoin. Money's moving around. It's going up. It's going down. You got to get drunk to put up with that. You got to get drunk to put up with that. There's just no other way around it. One last story. I'm going to have a sip of water here.
This is the Goldman Sachs?
One last story. Yeah, absolutely. One last story on the week. Goldman's analyst gave a sector-by-sector outlook for 2018, just basically telling people who they thought they were bullish on, what they want people to look at. And then please go ahead. Goldman is a really aggressive investor. We all know that. If you know anything about Goldman Sachs, just go out there, take a look at this for yourself. There's a lot more companies than the companies I'm going to name. I'm just going to go over a couple of the big ones. So in aerospace and defense, they're very bullish on defense. They got Northrop Grumman and L3 Technologies mentioned. In the agricultural sector, they're neutral. They got CF Industries and CVR Partners. In the autos, they're very cautious. They got Aptiv and Delphi Technologies, so none of the actual car makers out there. In the chemicals, they got Dow, DuPont, and Platform Specialty Products. In the machineries, they've got a buy in there. Obviously, Caterpillar, John Deere, guys that are already Caterpillar driving the S&P or the Dow this year. Between Cat and Boeing, I mean, they're driving the Dow, and that they're still at a buy over there, and that they're looking for them in 2018 to do equally as well. As I mean, the world's economy has picked up, building is picking up. John Deere and Caterpillar, selling equipment. You know, they're selling the equipment. In medical technologies. Hologic, Baxter, Edward Life Sciences is some of the companies that were mentioned. In multi-industry, another company a lot like Caterpillar, something would be Ingersoll Rand, doing a lot of generators and make tools, all sorts of stuff. Packaging, paper, and forestry, they mentioned WestRock. And in transports, FedEx and UPS are the companies that Goldman mentioned. Goldman's got a lot of other companies on the sector-by-sector outlook for 2018. I definitely would recommend people go and take a look at that. Obviously, Goldman Sachs knows what they're talking about. They're running a really good company over there. So if they're putting this out there, they probably see a lot of upside in these companies. They weren't overly cautious about anything but the autos. And like I said, they didn't mention the actual auto manufacturers. Some guys that do some other stuff in the auto industry. This was it. This was number 8.
Number 8.
Number 8. Woo! Yeah.
Another one in the bag.
Another one in the bag. I can only imagine we're going to be doing videos on Bitcoin all week.
Oh, I can imagine.
It is going to be a gong show. I am looking forward to it. It is always a pleasure to be here with you.
Same, right back at you.
Yeah, I'm sorry to thrust all those earnings calls on you there at the end, but it just felt like this podcast was going to go a little short. We probably would have been about 48 minutes.
Something about that, yeah.
We pushed it to about an hour. Yeah. Seems a lot more like a podcast, even though a lot of those weren't really justifiable for their own video, except maybe that Brown-Forman one, which actually taking a look at.
Pretty decent, yeah.
I was really impressed with the Brown-Forman one. Good company, obviously. Good Kentucky bourbon. Yeah, that's it. Podcast number 8 was a good Sunday for you.
Excellent Sunday.
Excellent Sunday for me, Anthony. I love doing this with you.
Same back at you.
Between the people that we do it for, the people I interact with on the internet, the comments that we get, that's phenomenal. I love talking to investors. I love hearing their opinions on things. The back and forth is excellent. The back and forth with you is excellent. I finally get to get you.
Thank you.
Only every Sunday we get to get you here.
Well, once in a while I sneak into the videos.
You did. You got pushed out of one.
I did. I tried to do a little hostile takeover myself.
You did try to hostile takeover. It was a good effort. It was.
I tried.
You should have brought your 11 new directors with you.
Oh, I should have.
Then my shareholders maybe would have decided to vote for you, and I'd have been out of the videos.
I'll keep that in mind next time.
Don't. That's my bread and butter. those videos, bro. That's the only time I come out of my little mouse house and actually get out into the real world is when I do my videos sitting on the counter here. Yeah, it's been a good week. A lot of good stuff coming up next week. I can only imagine how things are going to play out as we get closer to Christmas. I love this. We love you guys. I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
We thank you for joining us. We want comments, likes, subscribers. We want it all. Hug your grandmas and grandpas. Get ready for Christmas. It's the Christmas season. Put up your Christmas lights, your Christmas tree. Happy holidays to everybody who doesn't do the Christmas stuff. Yeah, just have yourself an excellent rest of your Sunday, an excellent week going forward. If we don't hear from you until the next podcast, yeah, we want you to have an excellent week. But if not, feel free to come back tomorrow on Monday where you know we're going to be back with even more financial news. Have yourselves an outstanding rest of your day.